Welcome to this week's episode of Hidden Wealth TV, the show that's dedicated to helping you discover and uncover your hidden wealth. I'm your host, Kristen Oakley, and I'm joined by Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. Chuck, my friend, it's great to be back with you in the studio. How are you?
Great. It's great to be back with you, Kristen.
Well, I am excited about today's show, as I always am. If you're new to us, you are in for a treat. Chuck jam-packs these shows with so much helpful, valuable information to help you make better decisions with your hard-earned money, and specifically to help folks save money when it comes to taxation, which is just so critical and so important.
Absolutely. We've been talking strategies to do that, right?
Yes, yeah.
And unfortunately, our country's got a problem of using kind of old strategies, right, to face the new realities of retirement.
Yes.
And this is where I think a lot of people, and I always use the example, if I gave you three choices, right, tax me now, tax me later, tax me never, which would you choose?
Tax me never, please. That's what I pick.
And I used to teach this around the country at different colleges and universities, and everyone, I'd say, okay, so you'd pick that one. How much would you put there? And I'd have people nod and say, all of it. Unfortunately, you can't put it all there, but there are things that you definitely, absolutely can do. And it really kind of starts with the kind of the wake-up call that today is not the old school retirement. Right.
Yeah. It's not your parents' or grandparents' retirement anymore.
Yeah. You know, when you really think about it, I mean, people, you know, you have a lot of risk right today. You don't have the employer-paid pension. Right. You don't have a Social Security system that can be counted on.
That's solvable.
Yeah, that's solvent. And then now you got the personal savings thing, but that was really kind of the least of the three legs of the infamous three-legged stool was kind of the personal savings thing, because you already had all your necessities, your discretionaries. You already had that covered predominantly with an amazing pension.
Right, the defined benefit plans, which are of yesteryear for most people.
Yeah.
Well, the reality is that, as you pointed out, 20th century solutions are not going to work for today's 21st century problems. And so I know we're going to talk about this today, are incorporating some tax-free strategies for your retirement. So let's get to it.
Yeah, I was so excited about this particular program, because this is something I've been doing for 28 years now.
Wow.
In learning. You know, I was kind of the one who, you know, didn't follow the kind of the traditional big box brokerage, you know, think only inside the box brokerage path. And so by going down this independent channel was really fascinating. Some of the top tax people out there in the world, I was able to kind of get their direct tutelage from, and learning that, you know, if you want outside of the box, you know, results, you have to think outside the box.
Yes. Yeah.
And everybody doing the same thing over, as we know by definition of insanity, expecting a different result, obviously is insanity in itself. And that's what we're really seeing in the space is people are just doing the same old, and expecting a different result, right? Pounding away as much as they can in their 401k.
Yep.
And if we go back to kind of the former kind of defined benefit pensions that are a dinosaur of yesterday, tax rates were like 70% for a lot of those folks in the 50s and 60s, right? As they were saving, right? Thinking, gosh, well, by the time I get into these late 70s and this whole 401k thing comes out, now I'll start personally saving there. And the reality is, taxes are on sale right now. But there's a lot, as we've talked on a number of programs, right? There's a lot of things being proposed.
Yes.
And so some of those strategies are a little uncustomary. I'll give you a good example. We've all kind of drank the Kool-Aid as it relates to, well, if I put this money away pre-tax, not only do I have this persona that I'm going to retire in this lower tax bracket, but that I'm actually saving tax. And I think of a really good example I read in a recent book on kind of the new rules of retirement savings. And the author, which I really enjoyed the book, he talked about the fact that here's somebody saving, and let's just assume they're in a 33% tax bracket.
Okay.
Now, I know taxes for some people listening are lower than that, but what will it be as an average over your lifetime? Because most people, if you don't know that, why are you putting money into something that has a variable rate that's been as high as 94%? Right. So he uses this analogy. He says, well, let's say somebody, you know, just uncustomarily works at the same place for 30 years. They don't have a pension, but they saved like $7,500 a year. Right. Well, that over time, right, will grow to a certain level, right?
Right.
And here's what's kind of ironic. Let's say now that person wants to start taking that money out, right? So they're doing the kind of the traditional follow the crowd 401k thing. Right. Well, now when they have to take it out, obviously they think they saved tax. So over that particular period of time at 33 1/3%, saving for that period of time, that's $75,000 of taxes deferred. See,
Right.
folks, you don't save tax by putting money away pre-tax. You defer the tax, but you also
kick that can down the road.
yeah, but you also defer the tax calculation, which right now is in jeopardy. So in that particular case, it took in that 30-year period, it took 30 years to save
Right.
$75,000. Well, let's now say that client wants to start taking money out, and let's say they take out $75,000.
Right.
Their tax, they will pay back, now think about this, with what took them 30 years to defer, in 15 years, they'll pay back $375,000 of taxes
Oh my word.
over the 30 years that they deferred the $75,000. Now that's ours and theirs. And I've written about this in my books.
Yes.
Ours
Right.
and theirs. So listeners at home, if you take the word theirs and you divide it in half, it actually spells the IRS. And theirs is a better game plan than ours. And there's definitely things that people can do, like looking at alternatives that gives you some of the same tax benefits of deferring tax, but being able to access that money to come out of things completely tax-free. For example, like a Roth IRA.
Right.
Section 7702 with special design insurance contracts, or we call them retirement insurance contracts. People, when they hear the word insurance, right, the crossbones go up.
Sure.
Everyone starts assuming, oh, it's this old school grandma, grandpa life insurance thing. No, it's called pension design insurance. It's some of the most, in fact, the two biggest banks that own the two biggest brokerages, now listen to this, have over 2 times in the cash value of those designs than what they own in physical real estate.
Wow.
But none of those big box brokerages will allow the protection of their depositors' money or their planning clients
Right.
to participate in those alternative programs. Now that should get you scratching your head.
Right.
Is it about profit or is it about protection?
Wow. No, that's such an important distinction. So you mentioned 7702 plans. That might be a newer strategy to a lot of folks. Do you mind unpacking that a little bit?
Sure. So it was very fascinating. Back in the day, life insurance, when taxes were so high,
Right.
there was this single premium insurance policy, and it was a single premium universal life policy, and it would allow somebody, let's say, that was getting maybe 15% at the bank in their CD, which was taxable, and back then they might see 9% of it after tax, to be able to take that money out in one fell swoop, put it into a cash value single premium universal life policy, and now start taking money out the next day tax-free.
Okay.
And netting about 14%.
Right.
Now, the cardinal sin with that was the assumption in a lot of those projections was that interest rates would stay up at that 14 or 15% level. And of course, obviously, as we went from the Carter administration to the Reagan administration, right, we brought the 70% top tax rate down, 28%.
Right.
And of course, interest rates came down, the returns at banks went down, and those things hinged on the performance of interest, obviously did not fare very well. And a lot's changed, and
Right.
it's changed significantly.
Yeah, even just that example, it just points to the fact that how things happen in one area has that ripple effect and changes things in other areas, just like with our own financial lives, as you've heard me say as well. How you make a decision in one area does and will affect all the others. And what you're talking about today is helping folks really create greater tax efficiency throughout your full financial plan, but it starts with really understanding where someone's starting from. So I know we're gonna have to go to commercial here, but if someone's watching today and they're going, gosh, I really want you to take a look at my situation to help me figure out what strategies I need to be employing in order to put some of these tax-free strategies into place for their retirement, what would you want to say to them?
Well, what we use is a personal blueprint plan, right? And it's helping people discover and uncover different things that they can do. And I think of a couple of the strategies like strategic Roth conversion, right? How to get your IRA insulated from the IRS, right?
Right,
And
yes.
that's going to be imperative because there's a lot of changes coming, which we talked about on programs before.
Right.
Secondly is learning where do you put new money that you can be putting away? Alternatives, like we
yes.
call the rich man's Roth or the Roth alternative account. Where can you be putting those dollars that really guard against the risks that you define? Because there's a lot of risks to retirement now. Now it's on us, right? The yo-yo
Right.
plan. We're on our own. One of those is the risk to taxes, and the other risk that's apparent is the risk to the markets.
Right.
And most people we meet are not guarded from either one of those.
Wow.
And unfortunately, those are two of the biggest risks that they'll encounter.
Right. So if someone's watching and they want your help, what do they need to do?
Well, look, call the number, right? I mean, get a hold of us. If you're somebody that's a high income earner, strong saver, an IRA, 401k, and you're trying to figure out what do I do to kind of go from tax to the max, right, to tax free. These are all strategies that have a proven track record of measurable success that you can learn. But the difference is a lot of people haven't learned these things, so it's the fear of the unknown.
Yes.
These are things that I can give example after example. The top corporate executives and the biggest businesses and the biggest banks around the country use this strategy over traditional retirement planning. But to most of us laymen's, right, we're not familiar with them.
Right.
So it must not be very good if we're not familiar with it, is kind of the consensus. And that's far from the truth.
Well, and one might argue that these strategies are trying to be kept secret from the layman's, but you are exposing them.
Well,
for
but
folks,
you're right.
right?
I think no, but I think you've got. I think that's a really good point because one bad apple upsets the apple cart, and I think even when we had the election, former people that running for president disclosed, right, that they're five blind trusts, et cetera. All were using this design.
Yes.
And yet it's very taboo to a lot of people.
Well, and that's what you do at Hidden Wealth Solution, is help people uncover their hidden wealth by helping them understand how these strategies can work for them.
Yeah, absolutely. Imagine being a low tax or a no tax retiree where literally your Social Security is not taxed, your income's not taxed, and your children's future inheritance is not taxed.
Amazing. Wonderful. Well, Chuck, I know we have so much more to cover on today's show, but we are going to take a quick commercial break, and we encourage you, if you want to meet with Chuck and the team at Hidden Wealth Solution to figure out how you can be employing some of these tax-free strategies for your retirement, it's very simple. All you need to do is call that number on the bottom of your screen, 844-837-3652. You're also welcome to scan that QR code in the bottom right-hand corner, and that will take you over to a landing page, ask you a few short, simple questions, then a member of the team will reach out to you to set up your complimentary meeting with Chuck and the team at Hidden Wealth Solution. When we come back, we have a lot more to cover about tax-free strategies right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Hidden Wealth TV. I'm your host, Kristen Oakley, here with Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution, and we are talking today about tax-free strategies for your retirement. Gosh, Chuck, so much important information that we are talking about on today's show. And you mentioned something earlier. I think a lot of folks, the reason they got lulled into this, okay, let me just put as much money as I possibly can in these tax-deferred accounts, is we were told this would be a good thing for us, right? Defer the tax, take a tax break today, get the tax deduction today, because later you should be in a lower tax bracket in retirement. But the reality is that is becoming increasingly a retirement myth, if you will, for folks. So I think this is a question that you help people navigate, right? Are you more concerned with reducing your taxes now for this year, or actually over the course of your lifetime? So talk to us a little bit about that.
Yeah, it's interesting. People typically have a micro view of tax savings, right? It's just what tax can I save today? But if that tax is going to cost you 2, 3, 4 times more tomorrow, you need to take a macro view, right? Not just this micro view. And by looking at that from that particular lens, now all of a sudden it helps people really open their minds to be like, wow, I never really thought about this whole idea of tax me now versus tax me later versus tax me never,
right? Which is what we want.
Right, and everyone wants the tax me never bucket, as we like to say, the bucket, right? Because you only really have 3 buckets to save money in. And as a result of that, many people have kind of just done the same thing over and expected a different result. And the harsh reality is tax rates right now are on sale, which we've talked about repeatedly. And they're going to go back off sale, and they're going to go off sale very, very soon. So I think that, the 2 things that really people can do right now is, number one, really take a hard look at how do you untax the money that has not yet been taxed, right? How do you strategically maneuver that, which we can talk about? And then secondly, what about the money that you can still put away, right?
Right, yes.
For those of you still working, right? You know, don't assume, right, that the tax me, you know, the save tax today is going to save you a lot of tax tomorrow, because you don't really save tax, you defer the tax. But you also defer the tax calculation, and this is where people aren't factoring that into their math.
Right.
So one of the first things we do is figure out what can you untax? Because the decisions you make with that today, especially with tax rates on sale, and some of the deductions that are also dissipating, and this is what's key about having a tax savings team, is looking at the reality of what's coming ahead.
Right.
Looking at that, there's strategies you can use to get money out of your IRA and convert it to Roth IRA. And a lot of people are familiar with Roth IRA, but they're intimidated by taking advantage of that because the unknown of what's that going to do to my taxes? How much more am I going to owe?
Have to pay like this year,
yeah,
right?
Like right
because
now,
of
like
that.
I'm going to have to come out of pocket. Well, look, what if folks, those of you listening, what if there's a way, which has been around since the inception of the tax code, that you can create a deduction that offsets the conversion tax? We do this regularly on a weekly basis in our practice. And then how do you do that, right? Because you need to make sure you have a knowledgeable tax professional that understands how that works.
For
And that's
sure.
what's great about having a tax team. Secondly, what about the money you're still saving? Like, where's the safe place to be putting that? Right now we have what I write about in my books, the acronym TIME. You know, taxes are heading higher. Inflation clearly is increasing. Markets will continue to be volatile, and the economy will continue to be more and more uncertain. I don't think there's ever been a bigger time, pardon the acronym again, than now for those four things to be true.
Oh, for sure. There's so many unknown variables and uncertainties out there.
Without question. And like a mentor of mine said years ago, and I love all progress begins with the truth. And the truth is, it's time. And time is taking advantage of people, not just from us aging, but time of what we can do about things.
Yes.
And so by being able to put money away and use deductions, or put money into something that really guards against the things that are the greatest threats and the greatest risk to retirement, which I see it narrows down to two things: taxes and market losses. And most people don't have a strategy. They think, well, I'm conservative now, and we see some of these target funds that are supposed to target your risk to be lower and lower the closer you get to retirement, that last year lost 14-15%.
And the sad part about it is not everyone had to lose money last year.
Right.
There were strategies and ways that could have been avoided, but a lot of those approaches, especially with target date funds, since you mentioned them, it's that cookie cutter approach.
Right.
Shoving people into a box.
Wow, we talk
Right.
to people all the time. Do you have a Roth 401k? I think so. It's like be looking at some of these things, but sometimes people don't realize there are also advantages to Roth alternatives, Roth 401k alternatives, Roth IRA alternatives, and one of those, which we talked about in the first part of the program, is actually using special design sections of the tax code that allow money to grow tax deferred,
Right.
take it out tax free, and pass that money tax free, which is that tax me never bucket. But sadly, it's written under the laws of life insurance, and when people hear life insurance, like we said, right, it's,
Right.
oh no, not life insurance. But this
Yeah.
isn't your grandma's life insurance anymore.
Right.
This is an entirely different strategy and tactic that's really proven to outperform the traditional markets because of different mechanisms in the way they're engineered.
Yeah, and times have changed, to
Well,
your point.
and people will say, well, the cost. The reality is, if it's designed properly, it's about half the cost of what you're paying in a low-cost brokerage account.
Wow.
Most people just don't know how to design it that way, so the assumption is insurance is insurance is insurance. It should have
Right.
been death insurance, right? What's the most I can get for the least price? This is polar opposite. What's the most I can shelter and protect, right, for the least amount of death benefit I have to have,
Right.
And that's what keeps the cost down, but it puts the performance higher.
And then, of course, being tax-free, that's just huge.
Yeah.
Yeah, absolutely.
No question.
Well, I know we talk a lot about on this show helping folks understand that what you're talking about is engaging in tax mitigation, tax elimination. It's not tax evasion. This
Right,
is
right.
all legal strategies. So talk a little bit about that.
I think people are so intimidated by taxes. The assumption is, I don't want to get into trouble. I've not heard of this before, so this may expose me to questions or an audit or something. These folks listening at home, these are strategies that have been around well before even the 401k and the IRA. These are strategies that some have been around since the inception of our federal tax code. And yet, because somebody hasn't heard of it, doesn't mean it's not true, right? Just,
Right.
I mean, that kills me, especially the people that will say, well, my CPA has not heard of it, Chuck, and that's why I became an approved instructor for tax attorneys, CPAs, and tax professionals, was teaching them things that they didn't know.
Right.
And I can remember distinctly at a very large university I remember teaching several years back, and I remember one of the CPAs came up to me before the course, and he said, why are you teaching on this subject? And I said, well, you'll see. And basically I explained, I said, you're still the most trusted advisor to the family according to Forbes. But if something's not deemed earned, passive, or portfolio income, there isn't a place to report it on the tax return.
Right.
So what Kristen asks you is, hey, have you heard about these special design insurance contracts or these cash value programs, the 7702 model? And the honest Abe CPA says, you know, I'm not that familiar with those. And what did you hear, or what did the client hear? It must not be very good because Phil, my CPA, he's not familiar with it.
Right, he hasn't told me about it. Yeah,
exactly.
Absolutely. Well, I love that you are helping expose and shed light on a lot of these things, and we are going to have to go to a quick commercial break, but we have so much more to cover today, so we encourage you. This is an excellent opportunity for you to pick up the phone, make this important phone call, 844-837-3652, or you can scan that QR code to get connected with Chuck and the team at Hidden Wealth Solution so that you can start your journey to developing some more tax-free strategies for your retirement. Much more to cover right after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Hidden Wealth TV, where we are helping you discover and uncover your hidden wealth. I'm Kristen Oakley here with Chuck Oliver, founder and wealth strategist at Hidden Wealth Solution, and we are talking today about tax-free strategies for your retirement. You know, Chuck, you mentioned something in the previous segment just about the economic concerns, the market volatility. 2022 was a horrible year for a lot of folks. They lost a lot of money, and it was a real wake-up call, because what if you're retiring right when something like that happens? And so talk to us a little bit about some of the strategies that you're able to employ for people to help protect and prepare them for retirement, but taking these tax-free strategies into consideration.
Sure, it makes me actually think of clients as you say that. You know, here they are, first year in retirement, waited a while. First year also they had to take the requirement of distribution was in 2022. So here they are, you know, they ended up being down about 25%. They had to take their RMD.
Right.
And so they took an account from about 500,000 down to 350, and nothing.
Devastating.
Yeah, they had no choice, right?
And then that's what you have to live off of, right?
That's it. There's that's the yo-yo plan, right? You're on your own, and they don't have a traditional pension. And so a lot of times clients have said, Chuck, I hear you talk about upside without downside, tax-free growth, tax-free access, tax-free transfer. What in the world is that?
Right.
Well, I use an example of Deer Valley ski lift, right? I actually talk about this, and I've presented it when I educate people. And you know, when you think about investing, right, we're at the whims of ups and downs and all arounds, right? Indexing takes 2 points in time and takes the average. So instead of the daily ups and downs, it's like two bookends, where it starts, where it finishes. Provided it's up, you get all the up, not capped like a lot of these low performing types of capped products, but you get unlimited upside with no downside. Well, that's significant, because if you're on that ski lift and it loses power, you don't want to be screaming all the way back down the mountain.
No.
You want to do two things that I think the listener will really appreciate. Lock in and reset. If you don't remember anything else, remember those two things. Lock in and reset. Now, tax-free, I don't think you're going to forget, but lock in and reset are key characteristics. So you lock in where the market falls, so you do not go backwards, but you then get to reset to where you get to start, where everybody else has to start making up for their losses. We get to start our new gains. And that's why in many of the properly designed programs, they've actually outperformed the same exchange traded funds that they could buy in their big box store brokerage accounts.
Right.
Just engineered differently with this indexing strategy that not only grows without the loss, right, of concern of loss, but also grows entirely tax-free.
Wow, and that's just a whole world that I think a lot of folks haven't been exposed to, especially during their working years when they've been so focused on the accumulation and putting as much money away as possible into these tax-deferred accounts.
Yeah. It's just people don't know what they don't know, or as we say, you can't be aware of something you've never been made aware of. And if people will take the time to really see And look, some of this stuff's been proven by actuaries all the way up to the top mathematicians in the country that designed properly, there's not something that can outperform that. Not saying that that's what everything should be in, but it's definitely having tax diversification like we talked about before. You want a tax me never bucket, not a tax me always bucket.
Exactly. Tax me never, not tax me always.
That's right.
It's a big important distinction there for sure. Well, I know we only have a couple minutes left in the show, but how would you like to close out this discussion of tax-free strategies for retirement?
Sure. If those of you at home, if you're serious about the concern of taxes, market volatility, and you want to do something about it, I think the key is to learn, right? So we do a personal tax blueprint. Shows you the tax risk road you're on, but it also shows you and teaches you strategies to navigate that. And I think the two things, if I leave you with them, these would be two key ones, would be learn how to untax what hasn't been taxed, and then learn where to put money where it can't be taxed again. And if you can do those two things, you've really set yourself up for much higher probable success of performance in retirement. And don't just leave it to the whims of the market. And if someone's not talking to you about taxes, they're really missing the mark, because taxes and market protection really are going to be the name of the game, especially as we go into these far more economic unstable times. And these would be the times to get these addressed sooner rather than later.
I know you work and help with so many people navigate these things. Is anyone coming to mind of someone you've recently been able to help?
Oh yeah, there's a really cool strategy. It's called the Family Wealth Tax-Free Transfer Formula. And if somebody has an overabundance amount of money that they not only don't want to likely need to spend or pass on as a tax liability to their future family, this is a great strategy to convert that from tax me forever to tax me never, and let that money go tax-free from not just one generation, but through 3 generations completely tax-free. So we approach it very specific to each individual client, but making sure it's personalized to them.
I just love, you are such a wealth and treasure trove of knowledge. I just have to ask real quick, how did this become such a passion for you?
You know what, I lost a lot of money in the market during the big tech boom and then bust. And instead of getting bitter, I decided, I'm going to get better. And that's what motivated me to go out and write now 9 books, educate people, colleges, universities, and basically teach people there's a difference between accumulation phase and distribution phase. There's just a whole other set of rules that most people don't know.
And there's a whole trove of hidden wealth to be uncovered and discovered as a result,
exactly right?
Well, Chuck, thank you so much. It's always a joy to be with you. To our viewers at home, we appreciate you watching. Again, that number to call to get your own complimentary personal wealth blueprint from Chuck and the team at Hidden Wealth Solution is there on the bottom of your screen, 844-837-3652. We appreciate you watching, and we look forward to being back with you next time. Have a great week.